Hey everybody, welcome to your weekend review for the week of Monday, July 18th, 2022. And oh, what a week it was. MBS opened up the week being down 25 basis points real early on European trading. All indications from the reports coming out are that a 75 basis point rate hike is coming from the Fed this month. That includes a probably planted piece in the Wall Street Journal from writer Nick Timiraos. Although the market is pricing in a 30% chance of a 1-point rate increase, no change is expected in the current rate of MBS runoff, which is at $17.5 billion per month. However, that is likely to bump up to $35 billion per month come September, as long as we're refinancing enough people to meet that. MBS Highway did a survey of about 3,000 mortgage and real estate people. 66% reported their markets as being active or very active. 33% saw moderate to significant pressures, so everything is looking real good out there. The consensus was that activity is slower, though very busy, and a lack of inventory is holding things up. Many are still seeing multiple offers, though not as many as before. Demand is still outpacing supply. The yield curve remains inverted. The 2 to 10 is trading at 17 basis points different, which is a real strong recession indicator. The Chinese real estate market is going critical as well, which could provide some support for U.S. bonds. We also got news that the U.S. home builder sentiment fell in July to the lowest since May of 2020 as inflation and higher interest rates hurt buyer traffic and sales. Talk about a pessimistic group of people. They're selling about 2/3 more units than they can possibly build, and they still have sentiment go down. Jeez, talk about a bunch of glass half empty people right there. MBS all day are testing that 25-day floor. We ended up being down 14 basis points. That 25-day moving average is at 99.88. We closed that basically right at par, 100.11. The S&P was down 32 points on the day, and then the 10-year Treasury was flirting with that 3.0 line, but did not break through conclusively. So we'll have to see how the trends continue on Tuesday. Also got some other news. The median sales price for all U.S. homes came down 0.7% from its record-breaking peak in June, according to Redfin. Seller asking prices came down 3% from their May peak. Bank of America reported better than expected earnings this morning. Mortgage volumes were down 29% year over year. Big increase in HELOC activity. The stock is up 7% before the market opened today. Average spread between jumbo and standard conventional 30-year loans is currently sitting at about 49 basis points. That has been actually about 6 basis points over the last half decade. This suggests that banks are competing with each other, better heeled home buyers, but they're keeping them in their portfolios. The loans aren't being pooled and sold in the market. We also got news that Wells Fargo faces a class action lawsuit again for allegedly scheduling fake interviews with minority applicants. With all these lawsuits against Wells, it kind of reminds me of that scene from The 40-Year-Old Virgin, where basically people at Wells Fargo must stay up at night trying to think of new and creative ways to get sued, allegedly. Tuesday was a relatively quiet day on the bond market. MBS opened up pretty flat, being up 9 ticks in the morning, which is pretty flat for us. They ended up being down 5 basis points on the day. Everything still range trading in that same range in between the 100.603 and the 25-day average, which is at 99.869. We ended the day again right around that par mark. Corporate debt issuance and European bond sell-off put pressure on early, but it's pretty much the stock market that was moving things today. It was up 41 points early, ending up 105 points up. Housing starts were down, unfortunately. They were down 2% to a 1.56 million annual pace, which was way off from the 1.4% gain expected. Single-family residence housing starts were down 1.8%. Permits were down 0.6%. Single-family permits were down 8%. Units authorized but not started were up almost 16% year over year. Completions were down 4.6%. CoreLogic also reported that rents were up 14% year over year on both new and renewing leases. Home builder sentiment collapsed in July as the NAHB Wells Fargo Index indicated issues surrounding inflation, supply chain bottlenecks, However, demand is softening, which is new. Fears of recession as well as some cancellations have the home builders sentiment being down in both polls this week, which I'm personally taking with a little bit of a grain of sand. If you're selling so many units that 2/3 of the items sold aren't even built yet, that's a pretty good problem to have. You're stacking it up pretty good. Stock market has noticed the issues surrounding home building. The S&P Spider Home Builder ETF was down 31% year to date. MBS, like we said, are still battling that range, so we'll have to see if there's a break in either direction tomorrow. Another interesting story that hit the press was the Great Chinese Mortgage Strike. In a country where discontent is not allowed, thousands of home buyers are refusing to pay their home loans as growing boycotts spread. Apparently in China, when you buy a house pre-sold, much like we were talking about a second ago, where Americans are buying a ton of houses that aren't built yet. However, in China, they actually have to pay on that unit while it's being built. And with a lot of the failures of the property developers, the people in China are saying, I'm not paying. So we're going to have to see how the government deals with that. Apparently, there's already a lot of censorship around the topic. We also got a new post from our sponsor, WellThatMakesSense.com. This is all about managing your brain, managing your body so that you can be of optimal performance. When we live in a state of constant stress, our heart center becomes incoherent and it stifles our ability to create. And author Joe Dispenza in Becoming Supernatural has some suggestions for that. So check it out on www.wellthatmakessense.com. Wednesday opened up positive for the MBS, being up 9 basis points early. Stocks were flat on the open. The 10-year actually opened above 3% on the morning and then retreated down to 2.947 before regaining ground to actually end up right back at 3.03 on the day, which is breaking through that technical line. Hopefully that holds into tomorrow. MBS retreated most of the day on European turmoil, moving the markets, and the fear of global recession and inflation. MBS ended up down 16 basis points on the day, even though we had a pretty strong 20-year bid to cover. Bid cover was 2.65 on an average of 2.57. However, the yield on it was 2.42, where the market was expecting 2.46. So the 4 basis point beat is quite large when it comes to treasury auctions. Also today, we got existing home sales. They were down 5.4% in June to a 5.12 million annual pace. Much worse than the 3.4% expected. Year over year, sales were down 14%. Inventory increased 10% to 1.25 million units, which is a 3-month supply. Keep in mind that 6-month supply is typically considered healthy. With a 1.25 million units, it's higher than it's been recently, although typically about 500,000 to 600,000 of those are actually under contract, though they're technically considered in the inventory number. Median home price is up to $416,000, which is 13% higher year over year. Though sales under 500,000, where you can find them, are much higher in terms of percentages. First-time home buyers are actually 30% of all sales, up from 27%, and cash buyers are holding steady at 25%. If we look at the daily trades, it's all still in that range that we've been talking about. I almost feel like I should make this sound clip and just play it every day, where we have a ceiling of 100.603, still working on that tattoo, and a floor of the 25-day moving average. Some stats came out today. I saw in an article that by the end of the year, mortgage payments will make up 28% of income for the typical first-time home buyer, the highest since the first quarter of 2007. Don't think anybody wants to go back to those days. That's assuming a 10% payment. Yeah, sure, everybody's just got that floating around. Mortgages should not exceed 25% of income to be considered affordable, according to the S&P. Also saw kind of a cool story that has nothing to do with mortgages at all. However, it looks like Volkswagen is working on building an electric Scout SUV. So these are the little trucks you see there that were super cool. Yield high prices on the secondary market, originally made by International Harvester. Looks like they're going to revive the brand by making an electric version of it. Hopefully it looks almost exactly like it does there, with a better interior and an electric engine. So the only thing that has to do with mortgages is I hope that if I get sponsors, you support them heavily and or send me money for doing these reviews so that I can buy one day. Finally woke up to some good news in the bond market on Thursday. I guess I need to break out the caramel coconut Kona coffee a little more often. Sponsorship hint. Anyway, woke up, MBS were up a quarter early in the morning and ended up the day with a pretty big win, being up a total of 63 basis points on the 4.5. The 5% was up 44 basis. Everything was kind of driven today by the European Central Bank, which hiked its interest rate by 0.5% for the first time in 11 years. The market was expecting a quarter hike and got a half point. They are trying to quell their 8.6% inflation rate. Their equivalent to the Fed funds rate is now at 0% versus America's 1.75. In addition to that, they expounded on its new TPI, which is Transmission Protection Instrument, which essentially, for the details we've gotten so far, is just another reason to buy bonds. ECB President Lagarde said they're prepared to go big with this program to stifle inflation. Zillow also predicting a 7.8% nationwide appreciation, though that will probably be a higher percentage in the lower ends and probably a little bit smaller in the higher priced homes. Initial jobless claims were up 7,000, which isn't a ton, though the trend is now upward for jobless claims. First time over 250,000 since November. We're still watching that range on the MBS. So we ended up today at 100.503. Hopefully tomorrow we will make a run and break through that 100.603 line that has been holding right through there for a couple of months now. That also converged with the 50-day moving average. If we can break through that and stay above that, there is room for improvement. Also got news today that FHFA Director Sandra Thompson has been called before a House Committee on Financial Services. They're a little worried about the financial security of Fannie Mae and Freddie Mac. As a reminder, Fannie and Freddie guarantee 76% of the $8.4 trillion outstanding agency mortgage bonds. Also got news of BlackRock, which is a huge player in the real estate world. They're one of the major companies is buying up all those single-family residences so that we don't have any for normal people. They are the world's largest asset manager, being the first firm to break through $10 trillion in assets. In the first quarter of this year, they have the largest amount of money lost by a single firm at $1.7 trillion worth of customer money. And on Friday, I once again started my day with better than normal coffee, and we had a great day on the bond market. MBSs were up 39 basis points real early before kind of settling in and some profit taking went on, and closed the day being up 27 basis points. Very good day all in all. The big point is that it's gotten us into a new range. So we finally broke through that 100.603 ceiling, which is now going to serve as our floor, which it looks like it tested a little bit today, but went back up. Now our new ceiling is 50-day moving average, which is at 101.84. So we could see up to a point worth of run up before testing that line. The 10-year ended up being down 60 basis points on the yield, which is excellent, well below that 3% marker that we've been watching for quite a while. The index of economic indicators fell 0.8% in June after falling 0.6% in May. For the first half of the year, it's down 1.8%. The Purchasing Managers Index came in at 47.5, which was much lower than expected. Services dropped the most, though manufacturing wasn't off much of that. Still pretty bad. Labor market has probably peaked. Unemployment's probably going to go up from here. All indications are. Like we said, the MBS is in a new range. U.S. stocks fell as the day went on, being down 37 points after disappointing social media numbers came in. Snap had poor earnings results, and Twitter's sales missed on concern over ad revenue, which also dragged down Facebook parent Meta and Google owner Alphabet Inc. Gas prices have continued to decline. They've fallen for about a month now. AAA national average price is now $4.41 a gallon, down 16 cents from last week, down 54 cents from last month. Yeah, it's still $1.25 above last year, but we're moving in the right direction, so that's a good thing. Mighty midterms, a great post today from the brilliant Elliot Eisenberg. Since 1950, the year following U.S. midterm elections has always seen an S&P rise, with the average gain being about 15%. So that's good news for those in the stock market. Want some more smarts? Want to learn how to become supernatural? Check out our reading notes from the book Becoming Supernatural by Dr. Joe Dispenza. Whether a memory is positive or negative doesn't change the ability of our minds to remember and learn from it. So you learn from the things you feel and experience, whether you like it or not. So you better learn how to control your mind and make sure your thoughts stay good if you want to be superhuman. Next week, we got a lot of data. It's must-see TV. Monday starts off with a 2-year note auction. We got some consumer confidence and some home price appreciation reports on Tuesday. Wednesday is the big day. We got durable good orders and the Fed decision, as well as a 2-year note auction. On Thursday, we get the GDP advance number and a 7-year note auction. Then we get PCE inflation and consumer sentiment on Friday. It's going to be a very volatile week. Safe travels to everybody out there heading to Western Secondary. Feel free to stop by and buy me some better coffee if you want to keep the bond market moving. And check out our sponsors and our influences. I hope you all have a great weekend.